Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So the new week is ready to start. Let's take a look again at the situation on the euro currency. As we said during the previous week, the price action on the euro currency looks really heavy, since, as we said on Friday, market wasn't able to reach even the weekly pivot resistance 1 during the retracement on the previous week, as well as to accomplish any intraday targets, as we have specified some ABCD patterns in the 4-hour time frame, and market wasn't able to complete them. So that has led to the logical plunge to the downside and continuation to the downside. Also, this is relatively supports our thoughts about the steepness of the right wing of this butterfly. So remember, we said that since this wing is much steeper than this swing on the left wing, this usually leads to the 1618 extension of the butterfly, and probably this is ready to happen. As you can see, after this some shallow respect of the 127 extension of the butterfly, market has continued move to the downside. One important thought still should be made here, that if this is the real plunge to the downside, market should not show any significant retracement, and of course should not erase this thrusting move to the downside. So if it will happen, market will show the deeper pullback, some fast return inside of this bearish flag. This will be not very welcome for the bears. But currently on this price action looks perfect even from theoretical point of view. So you can see the bear flag, downward continuation. On the common week we have two levels of support that could be used as the potential targets. The first level is the weekly pivot support 1, it's right here, 120.94. The most significant level that could stop the market of the downward continuation on the common week is right here. That is 1618 extension, that is of this butterfly. That is also weekly pivot support 2, it's 120.29 area. And take a look, that will be daily oversold. So this will be a really significant area for common week, and probably market will make some pause around this area if it will reach it. Also take a look, that trend on the daily time frame has turned bearish, as was also noted this moment, that if you remember here, market has turned to the bullish trend, but overall price action doesn't support it, hasn't supported that, and we have made the assumption that probably we will see some downward acceleration, some kind of the bearish dynamic pressure on the daily time frame, and that has happened. So if you still have no bearish position that could be opened during the previous week, that probably the swing of this recent day, of the Friday, that we should focus on to watch for potential levels where we could enter on the short side of the market, or to scale in with the position in the downward direction. Now let's take a look on the hourly time frame. On the hourly time frame we see this breakout of this triangle consolidation that we have discussed previously. Okay. By the way, if we will apply here the classical rule of the target estimation of the triangles breakout, we will get the areas around 121. That is very close to the weekly pivot support 1 that stands at 120.94. How we usually do this? We calculate the width of the triangle and the root of it, the most wide part of it when it has started, and count this width from the breakout point to the downside. If you will do this, you will get the area around 121. So that tells us that around weekly pivot support 1 stands also the classical distance, classical target of the triangle breakout on the hourly time frame. That is hourly time frame. Well, speaking about the levels to watch for the potential entry, as usual, we will first take a look at the weekly pivot point. It's 122.09. That is, as you can see, surrounded by different fib levels, fib resistances. And most interesting here is 122.20 area. 12 area. That is the 3/8 resistance from the whole swing to the downside. This probably could be called as the confluence resistance, since this is 122.26 area, just 10 pips higher. So that is a level to watch for as potential area to step in with a short position. One thing that we do not want to see here is some kind of fast acceleration and erasing of this breakout, erasing of this downward move. If market will returns right back above this area of support, previously support, now it will be the resistance, and if market will returns right back inside of this bearish flag, that will be not very good sign for the bears. At least this is not logical in the current price action, current environment. If bears are really strong, if they are in charge, market should not show such kind of returns, such kind of the price action. It could show some meaningful pullback, test the weekly pivot point, but fast acceleration to the upside will be not in the interests of the bears. So that is our current view on the market. Keep an eye on this level. First of all, the level around 122.10, 122.26 at the potential entry area. As the target, you could use 121, and ultimately for a coming week is 120 area that probably market could reach during the current week.